Hi there, this is Helen Tarrant again from another here with our whole team. Wow, it's massive. Welcome everyone. Welcome to another episode of Commercial Property Roadshow, a podcast. However you manage to access this recording today, I've got James from Method Insurance with us today. And one of the things that it was important to get James here is to talk about commercial property insurance, because there's significant differences between residential and commercial property insurance. And a lot of times people have it wrong, or forget to insure for some things and or feel that the tenant should be responsible for one thing and then they shouldn't be responsible for the other. I can tell you the amount of times that we've actually taken over or bought properties where the tenant's responsible for building insurance and then realized the building wasn't insured because the vendor has decided to let the tenant insure the building on their own, and the tenant has decided that it's not important. So just to avoid all of this, you should always take out insurance yourself and pass on the cost to your tenant, and so that you make sure you've got the right cover. So James, welcome.
Morning, Helen. How are you?
Good. So tell us a little bit about your business first up, and what is some of the insurances that you do around the commercial property space?
Yeah, definitely. No, thanks for having me on today. I suppose just a quick first point of call would be just a general advice warning. So this is purely just general advice. I'm not taking any objectives or financial situations or anyone's needs into account. So please take with what I say with a grain of salt. But I'm James from Method Insurance Brokers. We've got an office here on the Sunshine Coast and up in North Queensland in Townsville. And I've been doing insurance for about 17 years now. But when you have kids, it all sort of blurs into one.
So a long time. So you know the ins and outs of insurance.
A little while, yes. Yeah.
And you love insurance.
I enjoy the personal contact you have with your clients, and sometimes arguing with insurers can be a little bit of fun as well. So
I think that's where the benefit is, going with someone that's of a big insurance company versus someone who's boutique like James, is that they're there actually to help you through your claim and troubleshoot that. I know with our company previously, a lot of our clients might go to the CGU directly or Aon directly. And when it comes to claim lodging, it's a different experience to working with James, who obviously have the experience behind him, but it's a much easier hand-holding process, which can be really stressful for the investor, when what we're seeing right now is multiple properties going into flooding, getting flooded or in flood zones around Queensland.
So I suppose just going back to the other question, the role of an insurance broker. So there's mainly, if you can break it up into three categories, you've got life insurance, health insurance, and general insurance. And I sit under the general insurance banner as a general insurance broker. So my role is to help clients understand their risks, to find the correct insurance product for them, and to help mitigate their exposures. And as you rightly pointed out, Helen, my role extends to not just finding the right cover for the client, but also assisting them when they're at the most vulnerable period, which is a claim, when they've had a loss. So I'm pretty much there for the client from the start to the finish, and any questions or claims in between, I'm there to assist them.
Oh, fantastic. So tell us a little bit about what generally people take out when they're buying an insurance, when they're buying a property. So they buy a commercial property. Let's put two scenarios to you, James. Firstly, they're buying a commercial property, freestanding building. Let's just say generally just a freestanding building, say around 1.5 million, maybe in regional Queensland, maybe fringe Brisbane. Doesn't really matter where it's located, sort of roughly those areas, or maybe it's New South Wales, but just roughly a freestanding building. What are some of the insurance things they need to think about?
Yep. So I suppose the minimal cover I advise my clients they should be taking out, one is the property damage. So covering the building and the fixtures and fittings within the property itself. The second option that I recommend is the business interruption. And if you have a look at the stats from all the years insurance has been around, people that don't take out the correct or take out business interruption itself generally have will go out of business during the claim because there's no cash flow. So business interruption will cover the client's cash flow, i.e. loss of rent. And the third part I recommend a client take out is the liability. So you just want to make sure that your client has the liability cover in place should their property cause injury or other property damage. And then I suppose we can then look at the additional sections. So I also talk to clients about machinery breakdown, whether it be covering insuring air cons or plant at the property. Rent default. I was only aware of one insurance company that really offered a rent default cover prior to COVID. Post-COVID, I haven't had any luck getting the rent default cover through that particular insurance company. So that is a bit of an issue at the moment.
All right, so coming back to this business interruption, because right now we're facing some natural disasters. Is that what covers the natural disaster? Is something like a flooding and someone can't operate their business, let's say, a beauty therapist or a hairdresser, so their premise has gone under, or even, warehouse dentistry, people, basically can't get access to their to their business premise. So they have to stop paying rent because under the lease there is that abatement clause and natural disaster clause. Is that where business interruption kicks in for the property owner?
Exactly right. So obviously the tenant has their own insurance and would have their own business interruption cover. And as we were discussing earlier, flood insurance is not automatic on commercial property. So you've got to actually add it on. Once you add flood cover onto the property damage section, i.e. the building, it then also automatically is incorporated into the business interruption section. So if looking at the recent flood examples, if your property was flooded and you had taken out flood insurance, obviously the cleanup costs for your property and the building will be covered. But then looking at the rental income side, your tenant is unable to continue trading from your premises because it's going to take a few weeks or months to actually repair your property to be back to a usable condition. So during those weeks or months, whilst your tenant is no longer paying rent, the policy will cover the loss of income to the property owner, i.e. the rental income less the GST amount.
Okay, well, that's really interesting and really reassuring to know, because that's where most investors come under strife or start to panic because they worry that they've got mortgages to pay and always got mortgages to pay. Then they've got all these outgoings now that's going out and they've got no income coming from the rents.
And I suppose it's just also important to point out business interruption for a property owner isn't overly expensive. It's actually, when you look at the total cost of the insurance policy, it's one of the cheapest sections there. So it really makes sense to just include it on there. During the current, I suppose, I'm not sure if you call it post-COVID, but during COVID at the moment, there is a lot of issues around the construction industry. So we generally will look at a 12-month business interruption cover indemnity period. I've been recommending to my clients probably for the last 2 years taking out at least an 18-month indemnity period. So once the incident occurs, you've got 18 months to rebuild your property, and you've got 18 months to for I suppose having that steady income coming in from your insurance policy.
Yeah, okay, that's really great. And I think you mentioned also then going on to machinery breakdown. So I think some of the things that also impacts investors or landlords is that they may say, for example, have a warehouse with cool rooms in there, or a restaurant premise that has cool rooms. Now, it could belong to the tenant, but quite a fair bit in what we do and what we found is that the cool room or part of some of the fit out actually is vendor installed. Or landlord installed, so it belongs to the landlord even though the tenant has a right to use. Now, in a situation like this, it could be flooded, it could be not usable. So how does that machinery break down? How does that work?
Yep. If it was due to a insured peril such as flood, storm, cyclone, fire, etc., all your air cons or your cold room, including the motors, are covered under the property section. So when you insure your building, you need to make sure it incorporates all those extras that are attached to your property as well. When we're talking about specifically machinery breakdown, I always tell my clients to check the lease first to see who is responsible. But if it happens to be our client that's responsible, the property owner, I would recommend that they take out the machinery breakdown section. And what you want to make sure is the value that you insure it for is going to cover what you have there. With insurance companies, you can take out, I suppose, multiple options for a sum insured. If they've got a cold room in the property, usually that can be a bit more expensive than, for example, say a split system. Or ducted air cons are a lot more expensive than split systems. So it all depends on what they have at the property, is which way I'll go. Under a business pack policy where we include the building, the liability, and the business interruption, we can include another section, machinery breakdown. But if you've got some expensive items there, for example, a ducted system might be worth $50,000 to $100,000 to replace if it did break down, we might look at a specialized standalone machinery breakdown policy, which would be through a particular insurance company, would be separate to your business pack insurance policy.
So I think this comes to an interesting point. So sometimes when you have a freestanding building, it's actually really straightforward. So you have, you've got your 3 points that you've covered, which is, your public, your liability, your business interruption, your general, so your building, the property insurance, and then maybe, machinery breakdowns and a few bits and pieces. So that's pretty straightforward. But what happens when someone actually buys strata property, like a strata unit, and it's really, the tenant's done the fit out and they probably provided a warm shell, which is most likely some flooring, some blinds, maybe there's a kitchenette that belongs to them with sort of a little hot water system and potentially obviously aircon in the building. Is there insurance they need to get out for that, or what does Strata actually cover?
Yep. So there's no real, I suppose, cookie cutter approach to that situation. There's 3 entities involved at the end of the day. You've got the body corporate, you've got the tenant, and you've got the unit owner. So already it's a little bit messy from an insurance world to work out who's responsible for what. All we can advise is for our clients to make sure they protect their assets and don't rely on other people's policies. There'll always be some cover under a body corporate policy for the unit owner. But again, depending on which insurer the body corporate is through or what they actually want covered, it may not be enough for the unit owner. So we always recommend 2 things. One is insure your asset, but what have you actually spent on the property yourself? What fixtures and fittings have you installed that wasn't there when you've bought the property, or that the tenant is not responsible for? And that's generally just a starting point, what we can go off moving forward. But again, it really works back to what we discussed about the freehold title is you want to make sure you've got your property covered, your liability, your business interruption, and again, the machinery breakdown. But as I said, there's no cookie cutter approach to it. It's really, you got to delve in and work out who's responsible for what, which can be a bit tricky sometimes.
Yeah. Okay. Yeah, because I think that the strata ones, often people go, oh, well, I probably don't need insurance. And most of the time they don't if the tenants did a full fit out, especially if they buy a warehouse. But when they come to office spaces, that's where they are. Well, what should we be insuring for? And then a split system in an office space could be 20, 30, or sometimes 100,000. So,
yeah. And then looking at the type of ducted system or aircon system in there, as you said, it could be $100,000. If it is more expensive, that's where I will tell my client we need a bit more information. The insurance companies, when they're insuring for something that much, they want to know how old is it, and the manufacturer, and also a maintenance schedule as well. And once I have all that, I can then go out to the market and get some insurance options for them.
Yeah. Okay. That's great. Now, just take me through the claims process, right? If someone is your client, just say now that's happening in this disaster, they know that their property is flooded. And they call you up. What happens from there? Like, you must be having a really busy period at the moment with people calling up. Oh my God, my phone's flooded. Yeah.
I suppose the biggest claims I'm seeing at the moment so far is just roof leaking. But I suppose my role is I am the first point of call. I'm available 24/7 for my clients if they have any incidents, because obviously claims or Damages don't just occur between 9 and 5. It happens during all hours. So I'm always available for my clients. But my first point is just to make sure that they're right, make sure that they know the process of what I'm about to do, and just to keep that communication up with them and the insurance company to make sure everything flows through. So if any sort of damage has happened to my property, my first question is, what can we do to mitigate further risk, further exposure? So if it is, for example, a roof leak, you might want to get a builder up onto the roof and put a tarp on there to stop further resultant damage from coming through. If it's a flood, it's a bit different, open all the windows, doors up. But I'll explain to the client what they need to do to mitigate their exposure. Then my next role is just to give the insurance company a call, probably spend a fair bit of time on hold, waiting to get through to them, because that's what I do for the clients. It saves them having to do it. And then I just lodge the claim and get the advice from the insurance company, which again is try and mitigate your exposure as much as possible. And then let's get an assessor or a builder out there to actually work out what is damaged, what is salvageable, and how to move forward the quickest possible way.
And then I guess you manage that all the way through. Do you manage that process all the way through repairs and all of those updates that happen?
I manage it all the way through to the client has the money in their account, or the tenant's back in the property, or a tenant is back in the property. And then that's when I finally close my claim, once I get the final advice from the insurance company. So I'm there from start to finish. I'm the main contact for the client, and the insurance company and the assessor, and sometimes even the builders. So I'm sort of just when it comes to the from an insurance broker perspective, it's having the experience there is really important, because the lodgement is the most important process when it comes to a claim. You've got to lodge it correctly with the insurance company, and you've got to make sure that the first 24 hours there's some movement on the policy, otherwise on the claim. Otherwise, it can just sit there and there's further damage happening to your client's premises, which may not have occurred otherwise. So the first 24 hours is vitally important.
Absolutely. And I think that people forget about that because there's so many claims going through. They just let it be, and then 3 months later still nothing's been done. So That's definitely happened. So tips for people sort of in insurance, what do they do, and typically sort of what time do they start getting quotes for insurance and everything else?
Yep. So obviously it's as important as possible to speak to me as early as possible. Most cases, obtaining insurance from my end, from the experience I have, is quite simple. Most properties are, block building, iron roof, relatively new age, or in the last 20 years, and the insurance companies they don't mind insuring that. It's when a property is a little bit older, or it has a tenant in there that might be a slightly higher risk than the usual. That's where we need a longer time to go out to the market and obtain, possibly valuations, building and pest reports, those sort of information for the insurance companies to then quote on. So I suppose if someone's looking at purchasing property, feel free to have a chat to me first, and I can let you know whether I think it's going to be a simple process or a long process. And then I'll put some steps in place with the client to make sure that they have this by this date and that by that date. So by the time the bank requires a certificate of currency, we'll have all that sorted out, and there's no delay because of the insurance process. But I suppose one thing I think you do, Helen, and I'm doing myself more and more, is just trying to remind clients that under the contract that to try and put the risk back onto the seller, which allows our client some more time to review the insurance and make sure it's right by the time the settlement occurs.
Yeah, definitely. I mean, I know that when we first, this was quite a few years ago, that we were buying property in Townsville. They were just basically telling us, well, we can't get you insurance right now because we can see the cyclone coming through. So we had no choice but put it back to the vendor, because we couldn't.
And that's happening at the moment. I was trying to do a renewal this morning, and there's an embargo in place. So I've had to refer it back to the insurance company, say, hey guys, this is not a new business. We're not endorsing it. We're just trying to get renewals sorted out for our client. And they've got to manually review it and send it back to me. So there are embargoes in place around Australia at the moment. And if the embargo is in place, it's almost impossible to get some form of property insurance, whether it be vehicle or property.
Yeah. So look, definitely for you guys out there listening to this, is it definitely pays to drop James a line or email us, and we do a referral for James regarding what you need in terms of referral and also what you need for your building insurance. Always right to get the correct ones, and then to make sure you update it every year, because it's one of those things that sits in a drawer and you never actually access it until you actually have something that happens. So look, James, if they want to contact you, obviously we're going to drop your information below, contact your contact details plus your email plus the website as well, guys. So it's in the information below, whether you're looking at it a podcast or a YouTube, it's all in the information. But James, just a quick recap of what's the best way to reach out to you.
Best way would be either by my mobile or email or website. But do you want me to give my mobile over now?
Yeah.
So my mobile is 0404 850281, or my email is james@methodinsurance.com.au. Feel free to drop me a line, even if you're just don't even know which property you're purchasing, whether you're just looking at buying property through Helen. Just give me a call and I can give you some pointers of what to look out for, and let you know timelines on how simple it could be.
Yeah. And remember, look, insurance is very individual. We can give you the general advice of what it is. And this is what today's about, just to let you know what the difference is and some of the things to highlight, those three important things. And when you're looking at Strata, what are some of the things you need to ensure? If you are our client, we'd obviously walk you through that process. You talk to James and we sort of, during due diligence, there might be certain things that we find, like, the cool room all of a sudden belongs to you and doesn't belong to the tenant, which often we find these things that happen to belong to you that we thought belong to the tenant. Aircon that the tenant has, some of them that the tenant has installed, but some of them have been yours. There could be issues, things that may need to be replaced. So some of these things we'll flag with you. But again, you can reach out to me at helentarrant.com, drop me a line from there, or my email address will just pop up here on screen. And then, you've got James's information, my information. Do reach out, do find out more about insurance, because when we're in Australia, I always say that, you're either fire prone, you're fire prone, cyclone, or flood prone. So the chances are somewhere in your life of an investor, you are going to need to lodge a claim. So please make sure that, and this is why we're here today, to show that to you. So guys, until next time, drop us a line, comment, let us know what else you want us to cover. And if you haven't registered for our boot camp links is just coming up now. So register for that, and it's also in below. And we will see some of you on Sunday, and we'll see you guys on the next episode. Thank you, and bye for now.